Well, hello everybody, and welcome to another episode of Cody Underground live Q&A chat. I am Cody Willard. Um, Go to tradingwithcody.com if you want to subscribe to my services and be able to ask me the questions that I will be answering on today's call. And you will also be able to see my stock picks, my trade alerts, latest positions, analysis, etc. I went with a different background today. In case you didn't notice, I just changed the camera angle, and I guess I'm 10 feet away from where I normally shoot. A little bit different setup here. Well, a little bit of rock and roll today. Why not? Um, let's start off talking. There's a million questions in the Trading with Cody subscriber chat room from the last week because I was at CES, the Consumer Electronics Show last week. And which leads me to the first topic we need to talk about as we're talking about the markets today, Bitcoin and the cryptocurrency crash. Someone might call it the great cryptocurrency crash. Why? I think I just published a book recently called that very thing, The Bitcoin Revolution and the Great Cryptocurrency Crash. At any rate, Bitcoin, as I'm talking, currently at 9,900, down from 20,000 a month ago when that book came out. Look, I believe in blockchain, and frankly, I probably believe that this is, look, it reminds the blockchain, the cryptocurrency bubble that we're living in right now. And again, I bought Bitcoin at $100 each, and I took it as a payment back for when it was $100 each, back at tradingwithcody.com 5-6 years ago. And it's now a bubble, and it's a mania. And it reminds me a lot of, say, the dot-com era in the late 1990s. Doesn't mean that the dot-com revolution, the internet revolution, wasn't meaningful and wasn't going to actually happen. But those stocks crashed. The market crashed. Those things, first they were a mania, 98, 99. First couple months of the year 2000. Every dot-com company, anybody that had the words dot-com in their business model, the stocks would go crazy, sort of like today with blockchain. And there were, though, some Amazons and Googles out there that you could invest in. And they still crashed, but they came back and much bigger and stronger than ever. I think that some of these cryptocurrencies will do the same. You've got to find the Amazons and discard the pets.coms, but all of them will probably crash much further before this reckoning is over. And it's a reckoning. As mentioned, I was at CES last week, and cryptocurrencies weren't exactly like crazy going on everywhere. Driverless and voice revolution stuff was going on crazy at the Consumer Electronics Show last week, much more than cryptocurrencies. But everybody was talking about cryptocurrencies, and there were scam artists running around with great ICO ideas, initial coin offerings, and on these crypto or blockchain currencies or blockchain ideas. And it was funny. They were running around trying to try to raise money and get people interested in their ICOs, whereas most of CEOs is truly technology companies trying to find partnerships and do business. And at any rate, everywhere I went, people were talking about cryptocurrencies. Even I was at dinner with Kevin O'Leary from Shark Tank, and we had, I don't know if it was the maitre d' or the waiter or whoever, heard us talking about cryptocurrencies, and he stopped and told us about all the money he was making trading cryptocurrencies. And if you read my book that was published a month ago, you know that I was telling you guys there's no such thing as an easy dollar, including in cryptocurrencies. And you might make some money trading them for a little while, but in a bubble, most everybody ends up getting hurt because they don't get out early enough. It crashes faster than anybody thought possible, which with a 25% crash yesterday and a 15% crash today in Bitcoin. You see that in action. At some point, there in the next year or two, there's going to be some great opportunities to buy the Amazon.coms of the cryptocurrency and blockchain world at a huge discount to where they probably will eventually go, much like Amazon fell from like 100 down to $3 from its high in, say, February 2000 to its low in October 2002, dropped more than 90%. And now, of course, since those levels, even the highest level it was at, it's up 1,000% from 100. It's at $1,200 today. So there probably will be some great opportunities. And if you don't own any cryptocurrencies and you want to get in, now is a better time than last week. You know, trying to trade this stuff is probably for the fools. And but owning some of it is going to be revolutionary. You probably do want to own some, as I've told people to do for 5 years. That being said, I started selling Bitcoin at 3,000, and I've been selling all the way up. And I would not be buying just yet, other than a tiny, tiny toehold maybe to get started or something like that. I'm going to head on into questions and start riffing through them because, as I mentioned, there's probably a week's worth. Here's one. I'm just starting in the chat room, and I'll be very disorganized as usual, I'm afraid. Just get a better angle. Get some ceiling, but you'll still get some rock and roll. Is that my IMAP? IMAP and Led Zeppelin symbols. Facebook and Google. Wondering who's going to outperform in 2018. If you had to pick two, why do I have to pick two? Why do people tell me between this stock and that stock, which one's a better bet? I would tell you own a little bit of both. If I like both stocks, and I do, and I've owned them for years, why would I only want to have to guess on one? And for 2018, very hard to gain 1 year's worth of action in an individual stock, much less relative to another individual stock. But look, yeah, it's trading with Cody, and I'll put my feet to fire and throw an answer out for you. If I had to pick between Facebook and Google 2018, you know me, probably Google. I'm going to surprise myself. Again, I like both, but Google, the driverless revolution, for one thing, at CES, I think drove home the point that it's coming, and coming faster, at least to the cities, to major cities around the world, quicker than most people realize. And Google's going to be a big player in that. I think there's a lot of upside in Google from that driverless revolution, along with just continued growth. The stock's not outrageously valued, continues to grow revenue 30-40% every year in their core businesses. And you've got artificial intelligence, the cloud, other businesses in there that are going to be growing also. And frankly, the voice revolution, I think, is you guys know, I wrote a book 8 months ago, last year at some point, called The Voice Revolution, 50 Stocks for the Voice Revolution, and talking about the impact. We're at peak swipe right now. We're not going to be doing this nearly as much in 5 years from now as we do today, swiping our smartphones. We're going to talk to them a lot more. And the Google Assistant, Google probably spent $100 million at CES promoting the Google Assistant and their voice services. And, I think Google's going to be able to maybe catch and bypass Alexa. Amazon Echo, the Alexa platform, as a de facto standard in the voice revolution. So, excuse me, I got a split lip, it seems. It's very dry here in New Mexico. Oh, Alexa heard me as usual. So, you know, I think there's some upside to Google. Man, I was going to rip through these questions and then I end up expounding too much answering them. Thoughts on Lending Club? Low expectations, improving profitability, and high growth potential, question mark. I've looked at Lending Club a few times over the years and have never warmed up to it. In some part, mainly because of the management, and I just haven't grown comfortable with the stock, and I still am not. So no, Lending Club's probably not for me. What do you think of Disney? Professor Scott Galloway was predicting it could become the first horseman of tech by providing a Netflix-like package. So yeah, look, Disney is clearly rolling up all kinds of content assets, and they've been doing that for many years, from Marvel to Star Wars, to Winnie the Pooh, and putting those under one house and using that machine of creating products and licensing and branding and movies around those brands, and exploiting yours and my children, frankly, to get them to buy those brands' pillows and dolls and licensed nacho cheese products, is a very Disney's done that, and they've done it well, and they've created billions in profits doing that. And I expect that juggernaut is to continue, and they're going to start putting all of that package. Finally, 10 years after Netflix started doing this, they're going to truly start doing become an app, join the app revolution and become an over-the-top channel, an over-the-top app, and broadcasting, getting you that content, whether it's ESPN, Disney, Marvel, any of their content. They want to get it to you on a internet-driven platform, and because they have so much content, it's probably a bullish thing. And I like Disney. I was on Kudlow touting Disney 12 years ago on CNBC. The stock was at 18. It's at 110 today or so, and I still like it. I don't own it. I don't think it's revolutionary, but a good point that this move that they're doing, trying to become a Netflix-like service, is revolutionary-ish. I'll see if there's any questions from the people watching on this. If you're watching on the app, I just invited you to join. If you're logged in and you'd like to ask me a question on the app, please do so. Where are some more questions? Cody, I have two biotech small caps that you have been supposed to look at, still haven't. And as you know, I've been traveling, so no, I have not looked at those two you're asking about, Slanda, and I will do so. I don't even want to mention them because small cap biotechs are, I don't want to contribute to someone buying them if they're a scam, and a lot of small cap biotechs are scams. So with that in mind, I will take a look at those as a skeptic and see what I think of them, though. Any questions here from the crowd? Otherwise, let me find some more in here. I know there's quite a few more. Cody, Under Armour is nearing your buy range that I had mentioned a few weeks ago. Are you going to initiate a second tranche or wait for some more time? I'm probably going to nibble a little more here. I have no idea what the next 90 days or the last 90 days of Under Armour's business has looked like, but I do think there's value in that asset that the stock market does not recognize, and I'm probably going to put a little bit more in there, um, and nibble some more. I think we bought it at 11, the first tranche, and it ran right away to 15 here, and now it's pulled back a little bit. So I might take a look at that. Cody. Oh, that was a Disney question again there. Cody, you said you thought Facebook could top $220 per share this year in 2018. I'd personally like to buy some more of the stock. This again is quoting me. If it got back into the 150s. While the stock isn't in the $150 area, do you still think it can reach $220 this year in light of Mark Zuckerberg restructuring the newsfeed and its potential impact on profits? Feels like I'm investing in the dark at this point. Look, we've owned Facebook since 20. The stock's at 170, 180, down from 188 or something last week, off of the news that they are proactively trying to make the news feed and just your homepage on Facebook better, more relevant to you, more enjoyable. I'm all for that. I don't I don't need them squeezing every last dime out of news organizations trying to get their content on my news feed in 2018. Step back. Look at the next 5 years. Do you think we're going to remember this news feed change that Facebook did and the stock impact it had for one day? Probably not. You probably will still be using Facebook or Instagram or WhatsApp and or all of the above and or whatever other assets they've been rolling up and monetizing and or as some people might call profiteering off of in the future in the next 5 years. Yeah, questions here. Why did I remove Qualcomm from the portfolio a few months ago? The um, the biggest reason was that Apple was paying billions of dollars every year that accounting for profits in Qualcomm's books, and Apple was mad and didn't want to keep paying that rate. And when you and your biggest customers are fighting about royalties, it's usually not a good sign for the stock. And I don't want to be in a battlefield stock like that. And um, Qualcomm's not done anything for the last year or so since I sold it, and I'm not looking to buy it right now yet either. No rush. Don't have to own them all. Let's see here. There's questions from a week ago. Speaking of things that people don't remember a week later. In the chat room a week ago, there were lots of questions while I was at CES last Wednesday. People asking for the several days in a row about the Intel bug that had been found and the patch, the security breach, and what they were going to be doing and the impact on performance and yada, yada, yada. And Intel took a hit off of that. And it's up 3% today, starting to bounce right back to where it was before any of this news hit. And over 5 years from now, that's irrelevant what happened there. And I don't think it's going to have any impact. And we own Intel for a whole slew of reasons. And I had a great tour of their booth at CES. And when the blackout hit, as a matter of fact, Bobby Farrelly, the director of Something About Mary and Dumb and Dumber, and Bobby Farrelly and myself were and my partners were having a tour from Intel on all their latest technologies, and can't make this up. They were literally telling us, showing us their 5G technologies and how resilient their network from end to end, from Internet of Things to the cloud itself. It's so resilient, and they've got redundancies built throughout, and all of a sudden you're and everything starts turning black. And CES had a complete blackout. Turns out you need electricity to run anything. It was also really fascinating. As soon as that happened, we were up on a stage, and I did have a moment of 9/11 nervousness, frankly, and I was worried massive crowd or a rush might be running by. We were up on a platform looking down on the crowd at that moment, and it was totally cool. Nothing happened. Everybody was no panic. And we walked down the platform a few minutes later with some of the Intel people, and a woman started pulling out and playing a violin. You might have seen it on the news. And we were standing there, and Bobby turns to me and says, "It's sort of like the Titanic." And we all laughed. But Intel also had a couple of their new quantum chip, a prototype of their new quantum chip, and a prototype of their latest artificial intelligence chip. And when the electricity went out, there were security guards immediately with lights and tasers around those chips. And then we actually, with the security guard standing there, had um, the guy told us all about it, showed us the chips and told us what they're doing and where they're headed, and a lot of incredible stuff happening at Intel. But to the point, Internet of Things going to be generating a lot of revenue growth over the next few years. The cloud itself, probably stable, maybe slightly down. The driverless car, driverless initiatives, probably going to be generating some revenue for Intel, some significant revenue from Intel over the next 3 to 5 years. Intel's not going anywhere, and it's got a great dividend. And so, yes, I still own it. And I probably should have bought some more yesterday, or at some point when it was down because of that Intel performance thing from last week. I'll see if anybody watching wants to ask a question. Here's an emailed question. Cody, we know there has been a lot of nonsense, i.e. scams, Cody's words, going on in the area of blockchain. We also know there is a revolution going on in this technology. Is this something you're researching? Dude, well, I just published a book. You're a Trading with Cody subscriber. You get access to all of my books. You must be a new subscriber because you don't know that a month ago we published, and you have free access to it. I will have Kathy or Lori email you a copy of my recent publication, available on Amazon and on tradingwithcody.com, and free to Trading with Cody subscribers. It's called The Bitcoin Revolution and the Great Cryptocurrency Crash. And heck yeah, I've been looking at this stuff closely, and it's all in that book. Cody, my question is about Blackberry securing the driverless car platform. There was news last week that Blackberry is creating a secure platform for the driverless car system. And that is why I have owned Blackberry since about $10 a share. And I've been saying that driverless platform, there's a possibility, an opportunity for them there. And without a doubt, security in a driverless car is paramount. You can't have people hacking your driverless car. And BlackBerry is focused on secure, connected platforms. They are already in cars. So this is a no-brainer. It's why we own the stock. It's a good thing. Here's a question. I cannot buy puts. Can you suggest other options to hedge? Perhaps cash? I guess you don't have a margin account, and maybe you don't want one. And as I tell Trading with Cody subscribers all the time, when on those rare occasions when I do buy a call option or a put option or something, you don't have to do those trades. Don't feel pressured like you have to be buying call options or put options ever. You don't have to sell them. You don't have to trade them. Stick with stocks. Those are volatile and risky enough. You have to know your own risk reward, your risk tolerance, what your goals are. So no problem. Don't do put options. What are some other options to hedge? Without a doubt, cash is the best thing, man. I mean, you're either in stocks or you're in cash, or you're short. And so I've been reducing the number of positions I'm in. I've reduced the size of my positions over the last couple of years. And that is partly to hedge. I've raised cash to help hedge my portfolio. And there are other ETFs and things that you can trade that are short the stock market, or inverse the IWM, the Russell 2000, or the S&P 500, and just Google inverse one of those, and you can buy one of those. But what? Look, if you're not interested in doing puts, I wouldn't do the ETFs that are short the markets either. Use cash. Be conservative. If that's comfortable for you, if that's your approach, then stick with it. Don't change that. If you're watching and you're logged in and you want to ask me a question, please do so. Battery down to 20%. Battery revolution is coming. What we're doing with driverless cars, electric cars, smartphones, tablets, Internet of Things devices, batteries are a bottleneck. And I don't have a great edge for you. And there's lots of different things I've researched over the years on revolutionary battery technologies, and most of them are scams. Shocker. But be careful out there. But yeah, let's keep our ear to the ground on trying to find some battery revolutions. And with that, I'm only half an hour in here. Anybody have any other questions? Post now or forever hold your peace. I wonder if this thing's running on YouTube. It's fun to go to my YouTube channel and watch myself streaming. Yeah, there I am, like this. Live now. So, let's think if I can tell you one more story from CES and I'll wrap up. Something investment related, though. There's something interesting. Come back to the cryptocurrencies. One of the celebrities I was hanging out with at CES has a money manager friend who wants to invest in ICOs and create a fund that invests in ICOs, initial coin offerings. And I talked to the guy who wants to run that fund, and it was fascinating. And one of the things that I hadn't thought about is that and guys, again, most of these ICOs are scams. Run from them, okay? Be very careful out there. And even the good ones could get crushed. I mean, it's not easy, okay? And there's a lot of people out there just trying to take money out of your pocket. I'm not talking about the guy that I was speaking about yesterday, but he educated me on the fact that when you do an ICO, after it goes public, you can do this pre-sale thing first for insiders. And so you've got founders, and then some insiders can put some money in, and that'll help them do the actual initial coin offering for the public. And then you do the ICO, and the public can start buying the stuff. And none of it trades on an exchange yet, though, right? And so there are exchanges out there, just free market exchanges that you can go buy or sell these things on, but there's no demand. There's no buyers existing in it when you first do the ICO. But what you can do is take, say, $500,000 and go pay one of the more established exchanges not necessarily Coinbase. I don't know if they do this or not, but it would be an interesting thing to find out. Can you pay Coinbase to get on their exchange? And if not, that's good. If so, I mean, so what's the filter here? Can anybody just pay to get on your exchange? And if so, those nefarious actors will gladly write a $500,000 check to get on some exchange, so there are buyers that they can then sell those insider issued and or founder issued coins to the unsuspecting ICO retail buyer. That doesn't make any sense to you? Stay the hell out of Bitcoins and cryptocurrencies, because what I explained is a scam, and it's happening. And if you don't, like the old saying says, like the old saying goes, if you're playing poker and you don't know who the mark at the table is, it's probably you. I totally messed that phrase up, but you know what I'm talking about. You know the cliche. You're the mark. Don't be the mark, man. That will be the name of today's Trading with Cody post when I put all this up in a transcript. And maybe I'll do an ad campaign about my book, touting the fact that we published it, calling for a crash in the cryptocurrency market after having bought Bitcoin at 100, calling for a crash when it hit 20,000. Let's market it and call it Don't Be the Mark. I don't know. I'm not a marketing guy. Is that it? Any last questions? Any last thoughts? Let me look in the chat room one last time, see if anybody threw anything up there. Another feet to fire question from the same guy that asked about Facebook and Google. He wants to know, feet to fire, Nvidia up at the end of 2018 or flat? Could it not be down? That's awfully presumptuous on you, of you. You guys' username is Tenacious Trader. Tenacious. You're being awfully presumptuous, not just tenacious, in assuming that Nvidia could only be up or flat. Always be worried that there's fraud. Always know that there could be scandal. Always know that something could happen to someone important inside the company. Always know that some new product could completely disrupt any technology company you're invested in. Doesn't matter how secure they are at this moment. It is a revolutionary time in the technology world that we're living in, and things can go badly for even the best, most well-positioned company. So Nvidia could be down at the end of next year. But back to your question, feet to fire. Nvidia. It could be down. I'll go with down. It could be down 10% at the end of this year. I'm not sure 2018 is the year that Nvidia rocks. I've owned it since 30, and I still own it, and I'm not going to sell it just because I think it could be flat or down this year. But over the next 5 to 10 years, I think it'll be up. Could be a $500 billion market cap at some point in the next 5 years. Did this with Lincoln the other day. My 4-year-old, just turned 4-year-old daughter yesterday. She turned 4. And I was going, over there, man. Over there, man. She thought that was really funny. So now she walks around. Over there, Dad. So don't be the mark, guys. Peace, love, happiness. Support your local business. Hug your children. Adopt a pet. Get your pets spayed and neutered. Donate some money to some charities. Give big tips. Got all the advice for you. Lots of answers. Thanks. Good night. Goodbye.